Okay, so we begin the day 4 of the 6-day class. Today, focusing purely on practical. So it means today, if you cannot do practical, make sure you follow step by step. Okay, so probably we do a warm up here. As usual, click on the auto main. This is your day 1 homework. Okay, and type in your password. And perhaps later on I can have one stock of your choice. We can use that for stock diagnosis purpose. And the auto screener, which is a day 3 new tool, has to work together with the auto main. So you have to save both together. And at the same time, make sure your auto screener is not zip. So you need to unzip it with uncompressed all when you right click on it after saving from your email. Then put two side by side. If you still have a question how to use it, the IT helpers, Duke, Ife, and also this Mr. Lu are out there. They could assist you anytime today. Okay. Anyone have any stock of your choice? Preference given to those so far probably have difficulty either to make decision or difficulty to so-called Casey, is it? Okay, Casey, any stock? SGX, the S68.SI. Okay, Ken? Yeah, so some may be interested in Hong Kong exchange, the 388. SGX is a Singapore exchange. Exchange usually is a giant stock due to the fact the whole country usually only have a few exchanges stocks. Singapore is a smaller country, so only have one exchange stock, our dear Singapore exchange. So if a Singapore exchange go bankrupt, what happened to your Singapore stock market? Cannot buy stock anymore. So therefore, just based on this personal analysis, yes, a one layer of protection, all right, through the monopoly, through the special unique service. Okay, so we look at the SGX. Of course, you can extend to Hong Kong Exchange 388.HK. You can extend to the ICE. ICE, that one is it New York or Nasdaq? I think New York. Okay, the New York Stock Exchange provider. Then we got Nasdaq. Nasdaq is run by this exchange called Nasdaq, another stock. Okay, here we just need to look for, actually no need to look for it. Since I know it's a S68, I just type S68.SI directly. Okay, without the yellow box. Yeah, for example, here you can see my yellow box still go, but more important is here, right? This S68 here, right? At the purple cell, AI number 6. So make sure this is right. And whoever want to run the auto, right, screener, make sure you got this password inside, Otherwise, it will give you error, right? Say cannot found the this password. Okay, just click on it, SI plus SI, right? Roughly 10 plus seconds, you'll see the result. And today, in fact, this is almost like a mini coaching session, meaning we will not learn anything new, but focusing on practical application, right? So many of you, right, probably have a question on how to integration level 1, 2, 3, 4, short term, mid term, long term, how to balance. At the same time, optimism, FATA, right, how to integrate and so on. So today we'll go through, right, a few times so that you'll fully understand. All right, even so, this is not everything yet, right? Investment is so wide, however, you need to have a minimum one system. So let's go through the process again. So Casey, do you want to become a manager? So now I'm going to, you try, okay, good. All right, so Casey, very humble. So I guide you a bit, we go a long way. So for the rest, please write down the steps to follow, although now it's still a warm up. Okay, so we are learned in day 1, 2, 3. So Dr. T is going to combine all together. So you follow the flow, right? Arthur, same thing. You have question, right? So follow the same flow. In fact, if you follow the flow, 90% of you, most of your question will be answered after this practical here. Okay, the first one, Casey, we want to confirm using LOFTP first. So let me write down this 5 magic word LOFTP. And in order to analyzing, we have to go reverse PTFOL. Personal analysis, technical analysis, fundamental analysis, optimism analysis, and level analysis. Some still don't know what is level analysis. Yeah, later on I'll explain, all right, probably using sample example. Probably not so much on here. Here does not have a level 3, huh? Okay, firstly, Casey, are you more like a short-term trader or longer-term investor? Okay, so Casey straight away tell you, Dr. T, my PA, I'm looking for long-term. So therefore, today if you're long-term, you must focusing on long-term first, the optimism. If today you're a short-term trader, you can ignore here because you want to save time. Dr. T, I don't even got 5 minutes to look at one stock. If you straight away, for example, click on the short-term here. If the short-term not showing right trend, for example, the CAGR is minus 3%, you can close the window right now. If today you're looking at the short term for SGX, don't waste your time here. Okay, but today because KC is looking for long term, still got chance. We go back to here. Okay, so we double check whether it's a giant or not. But before that, we go through the day 3 exercise, even using semi-auto method. Dr. T, assuming I'm using the free version of auto software without the indicators, just 5 lines alone. So we apply a graphical method. Casey, assuming you're using that so-called primitive tool. Let's see whether we can make money using the primitive tool. Firstly, without knowing below, because semi-auto have nothing below. So do you see, is it uptrend or downtrend? Okay. Luckily now you got many co-managers helping you. So Casey, in future you're not alone, huh? No need to worry. So Casey, your opinion? No, don't look at here. Assuming now it's semi-auto means you only have here only. Uptrend. Secondly, can you read graphically? Agak-agak, what's the optimism? Okay. Okay, I don't know whether you cheat or not, but indeed it's 21%. Okay, I must say your eyesight very good lah. Okay, to be frank, because someone here cannot read very clearly, but you know, if it's not 21, definitely it's plus minus from 25 lah, huh? So therefore, if you're using the semi-auto method, it giving you hint is a low optimism. All right, this is the main conclusion. Okay, of course, the optimism using the semi-auto, right? It tell you, right, just a general kind of so-called condition of the stock. Okay, the rest then you need to go to Morningstar to spend probably 1-2 hours to, to extract those information out. Huh? Okay, now we extend from semi-auto to the full auto. Now assuming, Casey, now you got full auto, now I guide you through. Okay, firstly, it's starting year 2000. Okay, so does it fulfill the minimum criteria of IPO earlier than 2007? Just yes or no first? Yes. So please write a checklist first. So you fulfill the first criteria. Okay, and the second criteria, looking at the CAGR of the long term. Must be long term, huh? Which is 11%, has not adding the dividend yet. Because SGX also give dividend around maybe like 3%, later we'll see. So 11%, is it fulfill the minimum criteria of between 5 to 30%? Yes, please do a second check, pass. Oh, because now we are doing your PA on long term. If just now do a check on the short term, already failed, because short term just now is minus 3%. Do you get it? Now, so far we already spent a few minutes already. If today you are doing short term trading, you can save that a few minutes time. You can totally ignore SGX. But SGX, a few months ago, right, it was a good stock. Even during COVID-19 time, it was still doing well. Yeah, so that's why short term you need to adjust yourself, right, depending on the condition. And now we have to move on to the 8FA, because long term must be supported by the 8FA. FA is the best friend for a long-term investor. And TA, technical analysis, is the best friend for short-term trader. So knowing your best friend is important. So now we go to the 8FA. So Casey, now a quick refresher of the day one, the 8FA we have learned. So this is the earnings, the green line. So we want to look for consistent positive uptrend. Do you think these three keywords, how many you fulfill? Consistent positive uptrend. Is it consistent? Not quite. Is it positive? Not okay. We must 100% sure. This is zero. Everything above. Is it positive? One more time. Is it uptrend? Uptrend, we are not talking about 2-3 years like that down. We're looking at 10 years kind of trend. You draw like a line fit through. This is not uptrend. Only last few years. We are okay. Why not this way? We are talking about a general trend. For example, as if you are drawing an optimism line, fit through. Can we use 10 years? We are not looking at like these 2 years. Is it okay? Just to be fair. So can I ask one more time, using a time frame of 10 years, right? What's the general trend? Is it positive uptrend? Okay, so the only thing is not as consistent. So for this case, you have an option to, minus half a point. All right. You also have an option to give a full point. If you give a full point, means in future for similar kind of situation, you must also give full point. So as a manager, what is your final decision? Is it a half a point, you minus half a point, or you give a full point? Because it's not meeting a full criteria, not as consistent. No need to look at the past notes, you just refer to here. Oh, half a point, yes. In that case, in future, if you see stocks similar to that, you cannot be biased. You have to do the same criteria as well. Okay, half a point, we respect Casey. Now we look at ROE. ROE got two portions. The first one is look at the near term here. Either the TTM or the last financial year, either one is fine. Okay, so we want it to be between 5 to 30%. This one is roughly 30+%. Does it fulfill the requirement of within 5 to 30%? This is over 30%. Within 5 to 30, between. Okay, so the first criteria fail. Dr. T, too good also fail. Of course. Why? Because ROE 5 to 30%, there's a meaning to it. We don't want it to be too good until it's not sustainable. Some stocks just come and go, right? It probably 40%, 50% ROE later on cannot sustain. We're talking about sustainability. So therefore, when too good, we minus, let's say beyond 30%. When it's too little, let's say less than 5%, we also minus that half a point. But to be fair to this stock, when it's too good, we cannot just say totally erase all the points. So we reserve another half a point to look at the last 10 years, which is AR. AR for the last 10 years, if you take the average, it tells you it's 39%. So is it more than 5%, Casey? So does it deserve another half a point? Yes. So just now you minus half a point for earning. Now you minus half a point for ROE. Okay, so now you have 1 point. Is it right? Combined together from these two FA. Now the third one, which is the NAV. All right, NAV, again, based on the criteria, consistent positive uptrend. How many points? Okay, so you fulfill all, Okay, which I agree. The debt, unfortunately, there's no full information. There's only 1 point here. Usually for this kind of case, it's possible because the debt information is not the so-called very critical parameter. So sometimes even share investor may not have the full 10 years. But at least you got 1 point here. That 1 point showing around 30%. So for the debt to asset, there are two components. One is that 1 point must be less than 50%. So this is roughly 30%, the red dot. So does it fulfill that half a point criteria of less than 50%, 50? This is 30. Is 30 below 50%? Yes. Why Dr. T must be less than 50? Because within asset, there's a so-called liability and debt. There's a so-called the NAV. So therefore, we have to make sure the component of this debt is not much higher than the equity. Okay, so if the debt over asset is less than 50%, technically it means the this NAV, all right, net asset value or equity is more than the liability or the debt. Okay, just to make sure the company is not over leveraged, not over borrowing. Okay, so therefore, it fulfill the half a point criteria. The other half a point, we need to see a downtrend. Unfortunately, uh, this particular case, it does not have. So when you have this situation, you have two possibilities. A, you can actually rerun it with SI plus Morningstar. Okay, Morningstar may have that information. Okay, right? Or B, you can totally assume this does not pass. If you don't have, you don't know, to be safe, conservative, you actually assume it fail this criteria. Okay, because you don't know ma. So therefore, for this case, we assume we don't know, so we give a 0 for the second half of the debt to asset because we don't know the red color line, whether it's down or whether it's up. Okay, Casey, do you agree? So far, we have 1 point and half a point. Here we got 1 point, so we have 2.5 point. Agrees? For FA, 2.5. Continue, Casey. And operating cash flow and free cash flow, same criteria as a revenue. We want positive uptrend, non-inconsistent. Just these two keywords are both fulfilling positive uptrend based on 10 years. Although the free cash flow do not have a full 10 years, maybe like 7 years or so, doesn't matter. It's still long enough. As long as more than 5 years, I would say it's good enough already. Huh? So I agree with Casey. Both are positive uptrend. So you get 2 points. And the gap between operating cash flow and free cash flow is called capex. Okay? Yeah, because SGX may need to actually invest, okay, or need to expand the business. Perhaps SGX, need to acquire new exchange overseas. For example, they buy the Baltic exchange. The Baltic Dry Index. The one is under SGX right now. They also have a few commodity index, and so on. Okay, so we have 2 points extra from the cash flow, and so far how many points we have? 4.5. Continue. Is the revenue positive uptrend, the blue line? 1 point. 5.5 already. And the dividend will split to 2 parts. Part 1, half a point. Is it positive uptrend? Although you need to use a microscope to see lah. Or you have to come nearer to see. Here, let me draw like that. Yes, so you gain half a point because the dividend is increasing per share. However, to get a full point, you must see the top dividend yield to qualify half a point to make sure it's more than 2%. And dividend yield here is 3.6%. Casey, okay? Now you get half a point. Okay, so how many points you get total right now? Or others you can help? Do you agree, Casey? 6.5? Okay, because we minus half a point from earning and ROE, we minus half a point from the debt over here, the trend. So totally 6.5 out of 8, which I say is quite a good company. Okay, but quite a good company is for long term. It may not quite a good company for short term trading. Short term trading also don't care whether it's an 8 out of 8 company. Is okay? Yeah, we continue. Yeah, so in fact, SGX, today I'm teaching you like using a shortcut. Someone who have zero experience in the investment, follow through this way of analysis, can make some reasonable decision using 80-20 rules. You put in 20% effort and you can get 80% results. Okay, even today, you are not an expert of the finance world. You are not the banking experts, and today you can make a decision whether this SGX is a good stock or not. All right, so this is the motivation of that. However, moving forward, if you get to know more about SGX, then you should also understand about the economy mode. Okay, it's a monopoly stock. Okay, at the same time, he has a key position until no one can replace it. And somehow he set a good example, right? Every year, I think he probably set aside over 70% of the earnings to pay for dividend. Yeah, this is like a fixed deposit. Let me show you the this dividend yield history, the 发达. Okay, although this is a bit secondary, you look at the history here. Usually I pay more attention to dividend yield. PE, PB may not be so much. Okay, we look at dividend yield. Just at one glance, you see, minimum is around probably 3 to 4% in the last 10 years. You put in bank, let's say fixed deposit for 10 years, assuming after 10 years, every year bank probably will give you about like the most like last time 2% interest for the last 10 years. But this one can give you minimum 3%. And the share price always $6, $8, $6, $8, $6, $8. I know it's boring, but this is called fixed deposit in the stock market, right? I'm not saying SGX is good for dividend stock. What I'm saying is setting a good example. What should be a good stock doing, right? To actually give passive income to investor. All right, I would say you deserve even a better stock than this, but that could be a minimum example. If your stock cannot even beat this kind of performance, it may not be a good choice. Huh? Okay, so back to here, we continue back to the long-term optimism again. Dr. TY coming back to here because optimism has many friends. Okay, so some of you want to ask Dr. T what's the R2, what's the SFPF, RF, and the rest, and how to integrate, how to make decisions. Yeah, that's why this day 3, Mr. Chang also not specially stay late to ask. Right, again, now you see Mr. Chang, I repeat one more time for you again here. Okay, firstly, we look at the R2, but today our manager is KC. Right, R2 is 63% for long term. KC, you have learned before. When R2 more than 50% is more growth, especially it's more than 70%. All right, it's confirmed a growth. Less than 50% is more cyclic. It's a spectrum. So don't ask me exactly 50%, then Dr. T is a growth or cyclic. That kind of tricky question I don't want to answer. It's a spectrum, 0 to 100%. So 63% implying, is it more growth or more cyclic, Casey? Growth. However, 63% usually has not really fulfilled a higher growth. It's more growth, but not yet a higher growth. So I'll say it's a mixture. So usually for the case of mixture, you need to actually consider both this optimism and CAGR. If a stock is more cyclic, then we require a lower optimism, for example, less than 25%. If it's a more growth, then we look for below the fair value, less than 50% optimism, good enough. And Mr. Chang also asked, right, in the feedback form, Dr. T, why you say 50% optimism is it can be considered as an intrinsic value? You see your question is not I don't answer everything because when we discuss, I will indirectly reply already. Okay, by right, intrinsic value is a concept. I think also introduced by Warren Buffett and maybe by Benjamin Graham. It's based on some fundamental way. Maybe take a future, cash flow or future earnings and discount it to the current value. So this is called the intrinsic value. The traditional way, probably a few of you have learned before from some value investing schools. You follow this kind of technique, it's very hard for you to buy stock like Viacom, to stock like those high growth stock. You wait for 10 years, the share price or perhaps never drop to that value. So that's why theory is easy to learn but difficult to apply. But from Dr. T past experience, if you use a long-term price, especially through the optimism, this is like gravity. Mr. Chang, this is a gravity. This is a heaven and the earth. Okay, so the durian will eventually fall down. Okay, so it will fall down. This is the intrinsic value. Do you get it? Yeah, so if you use a pure fundamental way, it may or may not fall down one day. But if you're using the long-term price, okay, exhibit by the optimism using 50%, which is a fair value, you cannot guarantee a stock will be forever over 75, will be forever lower than 25. No one can guarantee that because optimism is a probability calculator. It just tells you it cannot stay low optimism for too long. It cannot stay high optimism for too long. But it did not tell you it has to reach a high optimism. A stock not necessarily will hit 25. A stock not necessarily must hit 75. But it tells you there's such probability. However, the probability to reach 0 or 100 could be a bit difficult, right, based on probability perspective. But to reach 50%, this is quite likely to happen. That's why 50% is like at the middle, right? For a stock, the low to come back to the middle. For a stock at the high optimism to drop to the middle, that the chances will be higher. So that's why it's a good technique, good alternative to the traditional intrinsic value method to representing as a so-called value, although it's not truly calculated based on the like a fundamental approach. But you can combine with the 8FA technique, for that. So therefore, if the value is P50, by the way, this is a P0, 25, 50, 75, 100, all listed here. It tells you the price at that particular optimism. Let me read you the P50. P50 is 13.13 here, $13. So it means the current price of the around 8.3 below the 13. How many percent is below? This is called, this parameter over here. This is called G2. G2 basically, is I think this one 11. Let me double check. Yeah, it's a G2. I think G1. Let me double confirm. Also a bit forget already. 11 minus 39 is 20. 28, 29, sorry, this is G2. So G1 is the price below the intrinsic value. So I mean this stock minus 37%, meaning the price is below the intrinsic value of P50 by 37%. Is it okay? And then Dr. T was G2. G2 is the difference between the CAGR and the average ROE. You use 11% minus 39, right? You'll get a minus I think 28 or so. Okay, there's a round off difference. So here tells you minus 29. Is it okay? Yeah, it's the difference between the price growth and the earning growth. So when G2 is negative, it tells you fundamental growing faster than the technical, which is a good news. And sometimes what we worry is the technical is more speculative, meaning the earning maybe go up 10%, but the share price can go up 20%. This is what we worry. Okay, at the same time, we come back to our long term again. So this is quite a detailed discussion. I'll see later on when more people coming, we can repeat one more time using other example. Okay, KC, one more time. The SF is 900%. SF means from the lowest to the highest, right? Which may or may not happen. And probably out of 1 million people, only one person can buy the lowest and sell the highest. Okay, I'm not too sure whether you think you could be lucky one. If you think you cannot be the 1 or million people, then better we follow, buy low enough, sell high enough using the PF. So PF is from the green line to the red line. And let me read to you. PF is 217%, 217. So PF has a meaning. When PF over 100%, it is a cyclic. So there are two ways to define cyclic. One, the R2 less than 50%. But it must be, again, supported by this PF over, right, 100%. In fact, cyclic, the real definition is a PF. So it's possible for a stock to be growth and cyclic at the same time. For example, the R2 could be high, but the PF is over 100%, then we still call it cyclic. But the R2, if it's low, less than 50%, is a stronger cyclic. Is it okay? Let's put it this way. Okay, we continue here. So, KC, do you think 200% PF, this is cyclic or growth? Wow, KC in a dilemma. Dr. T, I thought just now R2 60+% is more growth. Now you throw me a question, say you want me to answer it's a cyclic, is it? So which one is which one? Okay, the answer is very simple. Yeah, it can be both. It's both mild growth, 60+%, but highly cyclic. There's no conflict. So a stock can be growth and cyclic at the same time. Why? Let me draw this way lah. You see, growth and cyclic. This is growth, right? Defensive. Do you see the volatility? This is no growth but defensive. This is no growth but cyclic. So that's why this is two different things. Just remember, PF tell you the cycle, the volatility up down. Okay, and the growth tell you like the CAGR, the consistency, right? That part. Okay, so Casey, so implying to you that these stocks there's a mixed component, but at the same time looks like the cyclic is quite important. So that's why the optimism is crucial. And just now, you already read it's the 21% optimism. So that's why in the longer term, although it tells you it could be a good opportunity, but you also need to look in the past. You see this the peak here only happens once. So it means this peak, who knows, probably every 100 years you only go one time only. You never know. Okay, so therefore, usually for this kind of case, you may consider to lower down the expectation. What you can do, right, is optional. You can lower down, for example, this line to here. This is a bit advanced here. Usually I say it's optional, but here you can see in the top, I can purposely lower down this line and it can auto compute for you. For example, I do a scaling of 0.8, right? You can lower down so that you can touch more points, right? To make it more conservative. And all the data here will be computed automatically for you, including the new P0 to P100. Is it okay? Yeah, so in that case, if you want to expect one day you can sell a P75, this is a more conservative, right? But there's nothing wrong for you to follow the original one over here. This is just an additional feature we create for a special case. So far, no one look at the car COE. If you car COE, you do that. Last time it dropped to $1 before. Perhaps could be a once a lifetime thing. So if you follow $1 as a low optimism, it may not happen again. So that's why for those cases, you need to raise up the P0 and lines using this bar here for this car COE. If anyone look at the COE optimism. Look, seems like no one interested to buy car lah, huh? Then no need to look at this homework. Huh? Okay, so we continue. All right, Casey. So the main conclusion, this is a 6.5 out of 8 FA. At the same time, long term is low optimism. Right? However, right, low optimism can drag for long term. And one more thing, this low optimism right now is supported by level 3 because the Singapore Straits Time Index also near to the 25% optimism, but I think it's slightly higher right now. It's quite close. I think now it's probably between 25 to 30% optimism. 1 year ago, it was not supported, but right now it's supported. 1 year ago, right, the SGX was low optimism, but SGX was not low optimism. Why Dr. T must align to the level 3? The reason this way, if your stock do not follow the level 3 or not supported, the movement is too lonely. Right? You need to actually the whole market to support together. Then it's easier. Let's say like S&P or bullish, then individual stock also follows. Otherwise, your SGX, let's say when it sells go to low optimism, let's say the rest is all high optimism. It may not be a good opportunity. Okay, same thing you may compare with level 2. Level 2 is banking and finance. I think a few of you have done the banking finance sector or stocks in Singapore. Indeed, OCBC low optimism. Quite a few banking stocks also low optimism, although not all. So there's at least 50% support from level 2. Okay, means the sector also affected, but not for level 4 because the level 4 means at least half of S&P. If you do not know how to integrate MSCI World Index, because MSCI you need to use generic database, although you can use a J0P.SI, which is a MSCI ETF as approximation. Right, but that is not so much on long term. That one is more for short term and mid term, a little bit long term, not very long term. Okay, so another approach is you can use S&P to replace as a so-called approximation of level 4 because USA representing half of the world. Okay, that's one way. So if you know, day 5 will cover on the market outlook. Basically, S&P right now is back to near to the 70+% optimism, back to high optimism again. So therefore, right, knowing Asian stock market is low optimism in general, at least level 1 to 3, right? Most of stocks, or not most, probably I'll say more than half of the stocks are low optimism. But also knowing level 4, still moderate high optimism. Therefore, if you are interested in Asian stocks, Singapore, Hong Kong, Malaysia, and so on, right? You can buy, but do not, throw in everything, because it's not yet the best of the lifetime opportunity kind of thing. Also, not yet the best of a 10 years opportunity. It's a good opportunity, but not yet the best opportunity. But if Dr. T not good, it's not good. I want best. So in that case, I don't want to do anything. What if the next best opportunity may come after 5 years later? Are you okay from now on until then? You see, if the stock rising, then are you okay to miss a boat? So it's back to a personality. Kia si and kia su. Okay. Yusuf, kia si means afraid of losing money. Kia su means afraid of losing opportunity. So Kiasu one is quickly go on board. Ayo, Dr. T, wait for me. Otherwise, stock market run away. Dr. T, better do it. Otherwise, later lose money. I buy then later it drop further. I cannot lose money one. So I'll say these two personalities haunt both of you. So that's why you need to know yourself better. All right. So if you are the Kiasu type, you can buy a bit. For example, using progressive entries. You got 10,000, you enter 1,000 first, and then protected by 8 FA. Doing like 10,000 all show hands. Wow, Dr. T said the one is 8 out 8 FA. After buy, guess what? The short term may be bearish. Then you stuck for drop 5 to 10%. Then you cannot take the pressure because every day look at your 10,000 become like $9,500, become 9,000 until you lose the confidence. At the end, you sell. After you sell the next day, it goes up. Always a case, You know why? Because people always like to buy stock, next day must go up. Sell stock, next day must drop. They thought the whole world must, wait for the person. No, it's not the case. The world will not care about you, right? So therefore, we cannot just, use a speculation, the hope as a strategy. So we go in with protection by the 8 FA. Because 8 FA means even we don't know what happened to the share price, you make sure the business profitable. You look at the OCBC. Wow, OCBC works so hard. You're happy. Then you look at the Capital Mall Trust. Wow, the shopping center still open. Wow, the tenants. Wow, so many people, passenger. Whichever. So you see the clients, right, are happy. Then you're also happy because you can collect the rental. Okay. So therefore, the 8 FA is the so-called the solid way to protect you, but it cannot protect you from the short term, right? For example, if Trump say anything, right, especially have a negative impact on the stock market, right? Short term it could fall down. Even a 8 out of 8 perfect stock could fall down. So that's why, in terms of your main focus, fundamental is important. This so-called consideration in addition to long-term optimism for long-term investor. And then at the same time, technical analysis is important for short-term trader, right? You don't mind we go through a bit the shorter-term time frame? Assuming you are interested in just a mid-term, Dr. T, I'm in between. I'm not long-term and not mid-term. Hey, short-term not bad. Short-term, you can see, you can buy within this range over here. The CHL is 5%. So KC, does it a minimum? 5%? We need a minimum 5% to consider for mid-term or short-term. This one, it has a 5%. Does it fulfill minimum? And this one has not considered the dividend yield yet. Let's look at the dividend yield just now, I think 3 point something percent. So it means within that 1-2 years, that 5% you can add another 3+%. So technically you can have one system. You can sell, buy, sell, not yet, waiting. Okay. Drop to here. Dr. T, what is that? You read P25, 7.8. Then 7.8. Can you buy here? Cannot. When you drop to here, wait. Drop to here, also wait. Huh? Wait until when? No one know. You don't chase the price. You let the price come to you when it have a V-shaped recovery when you enter here. But when you enter, you must prepare of RF, means from here can drop to here. For example, I take this case. Right, you drop to here, don't buy, here don't buy, here don't buy, here you buy. You see, after you buy, you thought it will go up. No, never. It dropped to here, then you scared already. Yeah, I should not have listened to Dr. T. I buy here, I thought the next day must go up. I think I better sell already. After you sell, what happened? It goes up. So you need to have this tolerance level. And this tolerance level is called 7% RF. So you must check. Do you able to, take the risk of 7% to exchange for the PF of 20%? However, the real profit is not this 20% because on day 3 you learn that. For positive CAGR system, you walk plus the travelator. The travelator is a 5% a year, and your walking is a 20%. So technically, if the cycle is about 1 year, it's 20% plus 5%, and plus one more dividend yield. Probably after you collect dividend, one day you run. Huh? So this is called midterm. Okay? Yeah, so of course not every time so lucky one can get the so-called P75. So along the way, you want to progressively sell. Here sell half, here sell half. Nothing wrong. Because on day 3, you learn about the 4 exit strategies, including the last strategy is no need to exit at all. Meaning, whichever the price is up, down, you continue, you keep it. In that case, Dr. T, when do I exit? You exit when the 8FA from 6.5 become 4 points. When this uptrend positive become flat and become negative. When this positive become flat, become negative. Same thing as here. Hey, for this kind of a long-term 8FA to become even, not to say negative, but to become flat also a bit difficult. You probably need to at least another 10 years. Probably waiting until the Hong Kong exchange completely swallow the SGX, meaning no room for SGX to expand. Right now you see Hong Kong exchange take away the derivative business from this SGX. Last time the SGX can make quite a lot of money from derivative. So now they take back the A50 and the rest. The MSCI World, not MSCI World, the MSCI index giving the so-called that contract to Hong Kong exchange. Right, from SGX. Okay, that's what's happening. That's why causing the share price for SGX to drop so much in the last few months. Okay, anyway, what I shared just now is additional. The one you really need to do more business analysis. But the one is called the other part. You just need to spend 20% effort, follow the flow just now. Right, the other one is extra one, 80%. Usually, I'll say, in future, got chance you can learn more lah. But in this 6-day class, I'm not able to cover everything. So that's why through discussion, I don't mind to add in. Okay, so we continue here. And how about short term? Short term already mentioned, not worth it to you consider. Already failed the first rule. It's actually downtrend, minus 3%. Do you get it? So we can ignore it. Even say, Dr. T, then I can buy low, sell high. You could, but you got the disadvantage. The travelator go against you, minus 3%. Then you must work very hard to go up the hill. Yeah, I'm not saying you cannot make money lah. So that's why some of you, if you got stock moving in this way, including let's say this Hong Kong land. Hong Kong land also very good stock, undervalued stock, but short term could be like that. So that's why not easy. But Hong Kong land and the SGX both can give dividend. So you ask yourself, assuming you buy this stock, the next 3 years, the whole world go into crisis. If every year it give you 3% dividend, better than your right now the bank interest 1%, are you okay? Right. If 3% not enough, then you let's say consider OCBC. OCBC now in the next 3 years, although right now has close to 6%, assuming 6% cannot give you the year, let's say it give you only 5% dividend. Okay, so for the next 3 years, or let's say you cut further, it only give you 4% dividend. Assuming the business deteriorating, I think cut more, we cut to half. From 6% cut to 3%. The next 3 years, you only get minimum 3% interest from OCBC. Are you okay, or do you prefer to put your money in OCBC, so-called the saving account, gaining 1% or less dividend, okay, or not dividend, interest. So that's why this some of the decisions some of them have to make. But Dr. afraid OCBC could go bankrupt. So therefore, we don't buy one OCBC. We buy 10 different OCBC or different sectors. The OCBC here, I mean the giant, the giant of property sector. Probably you can name one stock in property as good as the OCBC in the banking finance. Buy one OCBC of the F&B, of the healthcare, something like that. So strong until it's almost impossible to go bankrupt. Even if you go bankrupt, it will affect many people. Probably government has to step in to save the company because it's too important or too big to fail, including our dear SGX here. Okay, is it okay? Yeah, so that's why diversification is key, especially for whoever planning for a retirement plan. Because you may not have active income anymore. Your savings, right, that is everything you have. So that's why so far you're playing a defensive strategy, and especially last time you probably lose money before. So that's why every dollar right now, before you go into investment, you're very careful. But remember, the stock market every day, right, could report different prices. Right? Even the best investor or trader in the whole world cannot buy at the best entry point, like the lowest, for you to, to sell, at the highest profit. Right? That is not a practical consideration. So that's why what we're learning here is buy low enough. Buy strong stock. This is something we can control. But there's something we cannot control. Now is strong. Last 10 years strong, but doesn't mean the next 10 years strong. So that's why you need to actually apply one more. It's called the economic mode analysis. So just now the additional person analysis I share is more on that. This is beyond the 6-day class, but just to add value to you. Okay, finally, we come to the technical analysis. Assuming you're a short-term trader, assuming you're interested, even you are not a short-term trader, you can integrate trading into investing. Look at the top, up, down, up. Again, Dr. T, what's that up, down, up? Huh? Okay, this is not on the optimism. This is on the moving average, on the trend. Remember, this is the global trend by CAGR. Just now, long-term up, mid-term up, short-term a bit negative. But just now, the up, down, up is like this. Let me confirm, is it? This is up, down, up. So what's the meaning of up, down, up? Firstly, the blue line, the 1 day, is above the so-called the 20 days. Okay, so this is a little bit up. So it gives you the minimum, this so-called entry point. So we usually need to make sure, mid-term or long-term investor, need to make sure at least the tail is up. So this stock has a minimum up because it has been falling for quite a few days already, or few weeks. Finally, there's an up here. But this up could be quite shaky. After up later on, the next day could be down again, right? And then the midterm right now is down. What's the midterm? The red line, the 20 days, is below the green line, which is 50 days. So that's why for the midterm to be up, probably need a few more weeks. For example, the green come down and the red will go up. Maybe you're touching somewhere here, ideally lah. And the last one, which is the green and the black, right now is up but going to cross very soon. So the third one, the long term, going to become down quite soon. This is like a Titanic. No one can stop it lah. Okay, so it's a sooner or later, unless within a few weeks, this one suddenly shoot up, then it's just almost miss, never touch it, and then go up already. But that probability will be quite low lah. So the short term is like a small boat, easy change direction. The long term trend is like Titanic. Wow, you see the two boats coming together, shift, cannot. Eventually, will clash at each other because it's too bulky to change the direction. So that's why you need to know your PA, KC. Are you the Titanic to look at the big, ships, or just a small boat can adjust? No, got enemy. Now I shift, and I'm safe already. But later on, come back, too late already. Yeah, so that's why there's a pro and con for being too flexible. And then every day your life is very excited. You cannot rest at all. I mean, you will be excited by making a lot of money, or you're excited by losing a lot of money, right? Within a few days time. So that's why for a trader, you need to train yourself to follow rules rather than rule by the emotions. Okay, and assuming, right, even you're a trader, right, make sure your entry, for example, you look at midterm here. After you, assuming lah, come to here, you already one day, you can enter here. This is your E for entry. You need to put a stop loss somewhere. For example, like this is a good example. E for entry, S for stop loss, and you can put T for take profit. So there are 4 ways to take profit, which we go through already in day 3. This is just one way. A second way is actually this counter trend, means while you're going up, you take profit. Another one is when you cross down, when you take profit. Is that right? But T, assuming I got stock, $1 go to $2 already, right? Like last time about micro mechanics, whichever. So what should I do? If I sell, it goes up, I regret. If I don't sell, it fall down, I also regret. So in that case, you can apply a technique. I think you're going to learn either on day 5 or day 6 called the 50-50 method. Okay, so what I can do is whenever a share price double itself from $1 to $2, you just sell half of it. Then you'll never lose money already. Why? Because you take back your so-called your capital already. $1 go up to $2, you sell half. So what does it mean? Your initial capital already take back. So your mind will be the strongest at the time. You'll tell yourself, my future will never lose money because I already take back half of the gain equal to my initial capital. When your 1,000 become 2,000, you sell half means you take back the 1,000. Do you get it? So it means your future is either a small gain or big gain. In fact, by having a strong mind at the time, you can likely to hold a long term. Because if you do not sell, that $1 to become $2, later on fall down to 150, ayah sayang, fall down, I think I better sell. Now later on, you go down to 120, then you frighten some more. So that's why some people, one of the dilemma is you are not able to sell high enough or hold long enough, partly because of the volatile stock market. Because no one can tell when the COVID-19 come. Within 1 month, can drop 30%. That is a historical dip, right? So therefore, knowing yourself is more important, and having some useful strategies to protect you, right? I would say for a general, let's say most of you, I would say 8FA is something definitely can help you. Whether you're doing trading or investing, even trading fundamental does not help much. But remember, you may not be a good trader. You may not sell right on time. So if you're forced to become a long-term investor, at least the 8FA can help you. Secondly, diversification, because everything got risk. Even a small risk is still a risk. So that's why minimum diversification is 10 stocks. Ideally, right, you can have more, is good. But if you have too many stocks, you also lost count. Dr. T, I also forget. Let me check my CDP account, got this kind of stock or not. Yeah. So if you don't know how many stocks you have is ideal. So what I can do is I ask you now without thinking. You can tell me all the stocks you have. Dr. T, let me think. I have to go back and check. So your stock is like your children, right? If you forget your children name, then it's not your stock anymore. Do you get it? Yeah, in fact, stock is better than your children. Hey, when we get old, our children not necessarily so kind like you, to your parents, give every month money, next time probably you need to give your children money. But your stocks can be very good children. Every few months, gyro to your account. Okay, you don't want also cannot, because by law they have to gyro to your account. So that's why I say, you cannot actually stop it. So that's why before you retire, or even after you retire, doesn't matter. You adopt 10 more children. Okay, so in that case, you have a peace of mind already. And the best is all these adopted children. Next time can even pass to your future generation for them to continue, right? To have all this so-called money, this so-called generator for them. But you must teach them how to maintain it, because a stock doing well now, not necessarily 10, 20 years later, could be still a giant stock. Every year, you need to do a recertification process. Dr. T, looking at KC example, may I know how often do I need to review it, assuming I like KC SGX? If you are a short-term trader, every day you must update. No choice. Because every day, in fact, is a minimum already. If you are mid-term investor or trader, I'll say once a week. Using weekend, you're free. Every week, you review one time of weekend, just nice. Okay, because Monday to Friday, you could be busy. If you are a longer term investor, I'll say once a month is good enough because the fundamental won't change much. Fundamental usually is every quarter, right? But I'll say once a month is just nice. So it means 1 year you just need to review 12 times. So after you buy, life become meaningless because no excitement. After you buy, nothing to do already. Just waiting at home, collecting money. Then as long as you ignore the price up down, just those important events that you pay attention. Okay, like COVID-19, you're probably worth, looking at it. Yeah, because even long-term investing, sometimes you may sell. Dr. T, is it always I need to sell a stock when the share price fall down? Optional. If you're a trader, it's a must to sell when it fall down according to your risk tolerance level. If you are long-term investor, selling of a stock purely based on price is optional unless you integrate, trading into investing. Rather, when will you sell a stock for a long-term investor? You sell, there are a few possibilities. A, because the business not doing as well as last time. The 8FA deteriorating, maybe from 7 point drop to 6 point drop to 5 point. Okay, you may not use the so-called the slope, whichever. You probably use a point system. Definitely, when it drop less than 4 point, you must say goodbye. Even the price is good. Dr. T, can you say one more time? If my company, the FA not so strong, if the price doing well, what should I do? Okay, this is a good question. Assuming today SGX is a junk stock, assuming the 8FA will need 2FA, but assuming today the SGX can run, every month go up 10%, 10%. In that case, don't waste it. So what you can do, if you got any weaker stock, for example, later on we see your spring cleaning. If any of your stock not doing well, fundamentally, but doing well technically, then it's a blessing in disguise. Then it's okay. You follow the short-term trend. Okay, so don't sell too early. Don't say what Dr. T says, spring cleaning means lousy stock sell immediately. But if the short-term bullish, you follow it. How to follow? Put a trailing stop. $1 go to $1.10, you follow. You follow at X% behind. For example, the X% drop means 10%. Every time it goes up, every time you put a 10% behind. So it means, for example, you walk in front, I follow you. So you go up, go down, I follow you. But there's always a distance of 10%. So I follow you from $1 to $5 to $10 if you're speculated. But $10, when you go down to $9, quickly I exit already. Do you get it? So this is called trailing stop. But that one is called theoretically correct. Meaning, if you really apply that, if $1 go to $10, like Bitcoin kind of things, go to like more than 10,000, I can tell you, you also lost yourself already. Right? When you fall down by 10%, I think, wait lah, because I go and attend a free seminar, you say, okay, I think Bitcoin can still go up. Then wait, then fall down already. Okay, so every system has its pro and con, but you must know exactly which one is suitable for you. Even you do know, you have to try it out. Yeah. So for example, Casey, you probably have experienced different ways of investing. So you know which one are suitable for you. That's why you come to the 6A class to find out, Dr. T, is there any investment potentially I could gain more than 5% return? If your aim is just more than 5% return, now quite a few. For example, REITs, for example, the major banks, OCBC, DBS, more than 5% already, right? This is a Capital Mall Trust, this Fraser Centerpoint Trust. This is around 4 to 5% already. And do you think others can stop them from making money? Quite difficult, right? Even their dividend could drop, probably drop 1%, probably drop 2% possible, but cannot forever drop. Okay. Then we got the data center REIT, the Capital DC REIT. We got the MIT, right? Those are the defensive business, although they are a bit young. Dr. T, if a stock, one of you asking, if a stock do not fulfill more than 207 criteria, like a Capital DC REIT or MIT, Maple Tree Industrial Trust, so does it mean they are not giants? No, they have a term called young giant. For example, probably they don't have 10 years, probably they have 5 years or 6 years. As long as a stock has more than 3 years of FA, and that 3 years or more FA, but less than 10 years, all right, can give the similar kind of a more than 4 or 8 FA, right, you can still consider them as a young giant, okay? However, you cannot use a long-term chart to make decisions. And your positioning, all right, the most is follow the midterm. So it means you can look at the midterm criteria. Is that okay? Yeah, so that's why in that case you will not miss those younger giants. Huh? Even including like iFast, including like Q&M Dental and so on. Right? Even Visa, you see, year 208, just missed by 1 year. If you miss it, then you probably will regret, you know. Visa can really run, no? Right? Every year run by 20%. Huh? In the last so many years already went up, I don't know how many times already. Okay, we continue. I think that's so much of it. In fact, through KC example, we probably have explained most of it already. Huh? Finally, KC have to come to here, write down the summary, action, buy, hold, sell, wait, or shorting for this HEX over here, and write down the comment. And write down here before taking action. Hey, action not necessarily buy or sell. Action including you holding to it if you have it. Action including waiting means I got cash but I wait. Action including shorting. Okay, but a stock pay dividend like this, although right now trend a little bit minus 3%, but it's not minus 30%. Okay, so therefore think about it, huh? Okay, so KC, do you feel confident right now after going through nearly 1 hour just on one so-called example? In fact, the rest of you also benefit at the same time, right? Including Mr. Chang and the rest of Arthur, right? Because these are the common questions you ask. I purposely don't answer to all because I know day 4, I already promised to you, I will not teach, anything new except a few more slides. So let's go through that a few more slides. Dr. T cannot help it, huh? Every class must add a bit here and there. So the mind is related to action taking. We go through that, only a few ones. Then later on we go through your homework. Huh? And the most important is how many of you have done homework, because that will depend whether after the break, whether Dr. T will keep my promise to give all the best features to you, especially for those who like to collect tips collect giants. You see, I train you from day 1 to day 3 is to depend on yourself to do all your fishing. So I will say, later I'll see how many have done homework. Okay, we continue. All right, so Dr. T, what are 2 important actions we need to do in this today action? Number 1, you need to do spring cleaning. So may I know what's the procedure? So assuming you got this kind of stock, likely the 8FA may not be strong. So double check, is it a giant? If it's less than 4FA, for example, 3 or so, whether less than 3 or less than 4 doesn't matter. It means it's a weaker. So this is the first sign for you to take action. And number 2, you can compare long-term versus a short-term. For example, your lousy stock, probably do well in the short term. Other those 8FA strong one, short term cannot make it. Your SCX lousy one, or probably your SPH, now chiong. Who knows your SIA run well? I don't know assuming. If that's the case, even you plan to say goodbye to them, but because they're short term doing well, who know the short term the tail up, then don't sell first. When will you sell? You wait until the short term rally, the fever is over. Yeah, you thank you to whoever helped you to push up, but don't assume that one is a turning point for your stock. But of course, it's possible. I'm not saying cannot. Yeah, there are certain stock, probably after bearish for 10 years, suddenly got one superstar management come in, change everything. But that one is quite difficult, to be frank. But assuming it's possible, then you do have to make a decision. But I assume it's not, then you can say goodbye when the share price come to a high for the short term. Meaning, later I'll show you when it comes to the change horse strategy. Then decide whether it's cyclic, growth, or defensive. KC just I did not mention. Defensive is when PF less than 100%. And later on, when most of you have done the good homework, someone must remind me to show you the most defensive stock in the whole world. Right? But that's provided you fulfill Dr. T criteria to submit homework. Okay, that we have actually gathered that information. Means those lowest PF ever, right, in the whole world. What are those? What are lowest in Singapore, for example? Singapore, probably you know a few already, lah, huh? Like your Vicom. Vicom is quite low, huh? But not may not be everything. Okay, then level 1 to level 4 integration, meaning whenever you see your stock performing, whether long term or short term, you're focusing on PA first, LOFTP. After you're looking at your PA, no percentage, then focusing on the tab of your interest. Okay, for example, if you're long term, straight away go to long term, short term, go to short term. That's the meaning of it. The TA side also including the tail of it. And then you follow by fundamental, the 8FA. You don't mind? Can we somehow the sound, Arthur, is it? Help to switch off, otherwise disrupt the session, huh? And then followed by the optimism. And optimism is not everything. Everyone look at me. Optimism is important when it's cyclic. And optimism is less important when it's growth. So that's why you ask me, Dr. T, assuming this round optimism never drop to low, do I need to wait for it to be low? Answer is not. Okay, if it's a growth stock less than the intrinsic value, the so-called intrinsic value of P50, 50% optimism, you may consider go in, but make sure the tail is up. Okay, for example, when you see it cross down the P50, you wait, but when you go up, even you do not apply technical analysis, when you cross P50 upward, then you may enter, huh? Yeah, but that's provided you have the holding power, huh? And LOFTP, the whole thing, make sure it's actually at least 3 star. If your stock is 2 star or less, then could be a good time to say goodbye lah. All right, but of course, if the short term doing well, don't say goodbye too early lah. Probably you can minimize the loss. Even if it's losing money, let the short term go up first. Okay, yeah, but don't use a long term criteria because your stock could be like that also, right? By the way, this stock already go bankrupt already, huh? So don't assume after holding 10, 20 years, one day it can come back or even let you make money. But T, I'm so painful. $10,000 become 5,000, 10,000 become 1,000. If I sell today, I have to admit I'm a loser. My parents told me cannot become a loser. How? Fine. So today, you don't have to become a loser. You can apply a technique called the change horse strategy. There are 4 ways to do spring cleaning, right? The first way is actually selling, right? When for this kind of cyclic stock, for example, your stock may behave like this. If it's a cyclic stock, meaning it's negative CR, but the PF, let's say it's over 100%. So for this kind of things, all right, try to sell over here, right? If there's a chance. Even if recover to here, probably last time you buy quite early, right? You have a 2 possibility. You can even make a small profit. That's a lucky one. Or you can minimize a loss, either way. So if your stock is cyclic going down, this is one possibility. And what if your stock is like this? It's a consistent falling down, means a negative CR plus a high R2. Although Dr. T say the one sure die one. Sure die one means there's a high consistency of falling down. For example, last time buy low here, right? But keep on holding. Guess what? The longer you hold, the time is a factor. So it means this company will lose more money when you hold even longer. Right? Usually long-term investor, there's a compounding going up. This is compounding going down. So the more you're afraid of selling or afraid of losing money, the more you lose by holding to it. If it's a high R2 negative CAGR stock. Okay, later I'll go through a few of your homework with spring cleaning. Then we can see some example for that. Okay, so for those who say ASAP selling, but Dr. T, of course, that was my finger that I cut. Now you don't feel the pain. I feel the pain there. You ask me to cut 10,000, become 5,000, become 1,000. Cut means I gone already. I don't know how to answer to myself. Okay, no need to answer. In that case, we use a third strategy. It's called, not yet. The third strategy is called the switching time. Okay, meaning you are already, assuming originally you hold your lousy stock for long term already. But because the short term it may do well, probably there are some speculative news. Maybe this stock got a new product. Take for example like creative. Okay, creative for the 10, 20 years coming down. Wow, suddenly 20 years got this super what sci-fi new product coming. Huh? Got potential, could be the next sound blaster like 20 years ago making money. Okay, there's a possibility, no one knows. But assuming the short term help you to push up to very high, but future no one knows. Future you need another 5 to 10 years. But if you have a better opportunity, you let the creative, the short term, help you to support come to a certain price where you say goodbye, you minimize the loss. Then use the money to, it means the long, initially it's a long term trend, but then you switch to short term for selling. Do you get it? So it means even initially you're planning for long term investing, but for selling of lousy stock. If your stock for short term is bullish, then you follow the short term trend purely to maximize the, not to maximize, to minimize the loss in a way. Huh? Okay, the last is assuming initially your $10,000 when it become 5,000 already. Today sell for sure is a losing money. So even the most stubborn person say die cannot sell one. Let me show you the most powerful change horse strategy. Meaning today you tell your wife or husband, I never sell stock. I just give a new name to our pet. Initially the stock name called ABC, now we call today XYZ. Meaning on the same day today you sell, then you use the remaining money, 10,000 become 5,000, you use the 5,000 to buy another giant stock and then leave it there. And then you tell your family or whoever, now our stock, now our children got a new name already. Okay? From a lousy stock, now give a new name, the giant stock. But the capital is still there. Except if you carry on with this lousy horse, the weak horse, the 5,000 may become 1,000. If you change to a strong horse, this 5,000 at least is follow a positive CAGR system. You follow a stronger 8FA. So whoever, until today, if you carry the burden for 10 years, 20 years already, some even as early as the dot-com bubble, don't carry too long. Okay? So I know you're afraid of selling is because selling means you label yourself as a loser. No, you never lose. You never sell. You just give a new name. Your stock is still there. Right? You never discard them. Okay? So who said cannot give a new name? Your money is still there, what? So that's why by right, technically the right way is to sell first, hold the cash when the right time next time go in. But this theoretically correct. Many of you is after you sell the lousy stock and tell you, your heart become cold already. So later on, after a few months later, even good opportunity, low optimism come. Last time I lose money, I think better don't buy anymore. Okay? So that's why I'll say sell and buy the same day. There's a certain positive side of it. Okay? Because it simply change horse. You force yourself to continue that the so-called journey. Okay? The never admit lose, that kind of attitude is good. But you must actually give a fundamental change. Is it okay? So I would like to request some of you to, may not work for everyone, but I understand because I review your stories, I know that some of you are the so-called, those a bit stubborn type, okay? You can hold for 20, 30 years just to make sure you recover. But there are certain stock they really cannot make it already. But this is your probably some hope you can get back your money if you can change horse, okay? So that's why it makes your homework today become important. Because you look at your stock portfolio, know what to sell, know what to hold. Hey, not necessarily all must sell one. If your stock fulfill 8FA criteria and super defensive, who say crisis must sell, even high optimism no need to sell. Okay, possible. So that's why the type ABCD personalities, you must examine it. So I want you to look for 10 players. Goalkeeper is your cash. Let's say your $10,000, maybe you set aside 3,000 cash. The remaining 7,000, no need all go in, right? 10,000 is just a multiple. Some of you probably got 100K. Some of you probably got 1 million. Then you can divide even further. So you can have one unit. Probably your one unit is 1,000. Probably your one unit could be 10,000. You think about it, huh? And then you enter progressively. Don't throw in everything because you may not know today is the best opportunity. Who know after you buy, then tomorrow you fall down 10%, you never know. So that's why the idea is actually, right, diversify over time, diversify over the players. And your players may get injured, so you need to have a few reserve. So reserve one means new blood lah. So like 30 SCI also got reserve, 5 reserve. In case anyone injured, then like SPH injured already, out already. The next one is not really injured lah, but the two superstar combined to one. The CMT and CCT. So you free up one seat. And this one seat already reserved for Keppel DC rate. Okay, MIT already go on board already, so already chiong already, huh? Okay, so some of you probably pro defenders, some of you could be more to the striker side. Okay, I'll say 4-4-2, 4-3-3. I don't know, guys know very well lah. There are many different strategies. Okay, even last time I was student 10-0-0 also have. Means super defensive. I don't want to attack you. Okay, I just want to make sure I don't lose money. 5 defenders, the best bank in the world. 5 defenders, the best rates in Singapore. Finish story already. Okay, because I don't want to fight with you, ma. Okay, so I just stand here. You come, I defend. Enough already. Probably 0-0, I also win. Something like that, huh? Because why 0-0 still win? Because previously already play a lot, ma. It means you are close to retirement. You already have a lot of wealth already. Your main objective is to protect wealth with gradual growth. Your main objective is not to fight in the market to take high risk already. Okay? So, but some youngster, hey, Dr. T, I'm 20 plus years old. I got 40 plus years old before I retire. I can run, doesn't matter. I got energy. Okay, possible. So that's why you think some may be more towards striker. To aim for 20% return or higher in 1 year and can take the risk even if fall down. But at the same time, even a striker is protected by the 8FA. For example, those strong growth stock, for example. Okay, plan accordingly. And last one, probably I used a quick summary of the 10 strategies. Because I promise you in this class, you'll learn the 10 strategy. Perhaps you may not fully understand, but I treat it as a refresher here. Right? You actually use the LOFTP to align together. Market cycle investing means you're focusing on investing. But at the same time, right, you're looking for those cyclic stock, maybe like DBS. DBS is a low R2, high PF stock, more than 100%. So for this case, when I highlight green means level and optimism are important. The technical analysis may be secondary. And FA and PA, I'm not saying it's not important, probably relatively not as crucial. Something like that. Okay, it means market cycle, make sure you align to the level 3. Right, the whole world, the country. At the same time, make sure you follow optimism, less than 25%. For example, quite many stock right now, level 3 and level 1 both follow to low optimism already, and right now are at the recurring phase. And growth or defensive investing means buy low and hold. Just now is buy low, sell high. Buy low and hold means you no need to sell high, right? You just buy and hold. So how you can hold? Protected by FA. At the same time, protected by maybe the technical entry lah, huh? Yeah, so that's why when you see a low optimism, less than 50%, you can consider already, huh? And make sure it's defensive enough, right? So it means even crisis come, it may not drop 50%, it may drop like 20-30%. At the same time, dividend investing, you buy low and hold for dividend. It means even the next 10 years, the share price cannot go up, you also don't care. Because you almost treat your stock as if a bond. And the best thing is your stock is a portfolio of stock, not just one stock. But Dr. T, assuming my stock go bankrupt, how? Okay, let me explain to you. Assuming today your stock are 100% defensive, means you got 20 stock. 20 stock all dividend stock. And each of them, let's say, pay 5% dividend yield. Okay, so what does it mean? It means that for every 100K, you can generate 5,000 cash flow every year. Okay, but if you do not invest, okay, for example, you put money in bank, 100K, probably you can only get 1K. Okay, this is assuming this is a bank interest, 1%. This is a 5K. Okay, but because you invest through 20 stock, assuming something nearly impossible happen, assuming the 20 giant, there's one go bankrupt, hey, everything is possible. Even Noble Group can go bankrupt. Noble Group at one time it was also a giant. Although before it not become a giant, it's not suddenly not become a giant. After the iceberg attack, it takes a few years for the business to go down. So assuming there's one giant, suddenly not a giant, so you only got 90 stock. Then this stock, one stock is gone. So what does it mean? It means you lose that 5% investment. Correct? Not 1 out of 20. So what does it mean? It means initially your 100K will become this so-called 100K become 95K because every stock is 5K, correct not? Guess what? That missing 5K, immediately the dividend for entire portfolio replace it. So it means that if you can diversify to 20 stocks with a dividend of 5%, you just hold for 1 year. If you can hold for 1 year, that's enough to allow you to have one company go bankrupt, 100%. Think about it. This is a risk you can take, right? By holding 20 stocks, generating 5% return, and that can allow you to afford one company to go bankrupt every year. Unlikely for if it's a giant stock by right, even for 10 years, unlikely to go bankrupt. But unlikely doesn't mean it's 0%. 0.1% also there's a possibility. This is for those super kiasi type. Okay, you don't use 10 stock, you use 20 stocks for diversification. Okay, even you prepare the 20 giants, even one giant can go bankrupt. But because they generate 5% minimum return, so therefore by holding 1 year, you can compensate their potential risk already. Okay, because the risk of not doing investment is even higher. Because when you don't do investment, your money put in bank just get 1,000 or 1%, the risk is even higher. Do you get it? Dr. T, I think you seems like pointing out something which I'm missing. I thought must wait for the best opportunity. When see good opportunity, then I throw everything in. Right now you see the power of diversification. Yeah, so even sometimes you see, wow, this one Apple very good. Wow, this ABC stock very good. Remember, right? You cannot take too much risk. So even certain are good, you're okay. You may not use exactly like 10% each. Let's say there are 10 stock. Maybe this stock you want to give 15% is okay. Right? But don't go like too much. Maybe this stock, wow, 50% weightage. Okay, because eventually you cannot control when you go in the other round. This is called unsystematic risk. Right? Diversification can help unsystematic risk, means management business risk. But even you buy 1,000 stock in your portfolio, you cannot avoid systematic risk. Systematic risk is like, the market cycle, like the optimism, like COVID-19. This can cause systematic risk. When it comes, no matter how many stocks you buy, they all fall down. That require level 1, 2, 3, 4. So that's why when you see the optimism is high, you reduce the position. So although this may be covered in the day 6, please write down. If your optimism is X%, then amount of cash in your pocket must be so-called X% as well. Let's say your optimism is 75%, then you should have 75% safe fund in your pocket. If optimism is 25%, means low risk, then you could have less cash in your pocket, 25%, so that you can invest more in the stock market. Do you get it? So Dr. T, what does it mean? If the stock is 100% optimism, so it means for those cyclic stock, you may want to consider to sell one round first, okay, and cash everything. But do you imply if a 0% optimism, I can show hands? You could, but you need to have a strategy. Show hand doesn't mean your 100K go and buy one stock. It's not the case, okay? And it should be progressively entering. For those with more capital, besides diversify to 10 to 20 stocks, protected by dividend stocks. For dividend stock, you may consider to average down further if there's a downside. Your worry is it simply will not fall down. After you buy one round, you buy 10%, then it straight away go up. So if it goes up, you can apply the second strategy called average up. Average up is more for growth stock because growth stock do not give dividend much. So that's why you can follow the midterm optimism. Whenever it fall down, you enter again. So each correction become a 1 point. This one 1,000, 1,000. Maybe every few months 1,000 go in. May or may not need to actually exit from there. Okay. Anyway, there are very many combinations here. Although I saw 10 strategies, there could be more variation from here. Okay. Number 4, discounted asset strategy means use the NAV undervalued stock lah. Okay, could be property stock, could be banking stocks. Okay, you need to limit to those high quality one. Today, if you've done well, I will give you a bonus of a strategy called discounted NAV stock. Those require additional topic, which is beyond a 6A class. We actually cover this under the charity course. Okay, but we'll give that as a bonus to you for those fulfill that discounted NAV strategy. So this require more on the fundamental side. To buy undervalue until it's one day no longer undervalued or overpriced. Okay, fun it simply means, Dr. T, I worry DBS could go bankrupt. Then you don't buy DBS, then you buy the entire Singapore. You buy SDI. Dr. T, I worry Apple go bankrupt. Then you don't buy Apple, you buy S&P 500. You got 500 company, one go bankrupt. Same as this concept. In fact, what I have been explaining over here is similar as what I'm saying here. Assuming 20 stock is one fund, one go bankrupt, right? The impact on entire fund is very little. And this is 2020. If a 30 STI, the impact is even less for one stock go bankrupt. If it's a 500 S&P, one stock, the impact is even less, although it's not equal percentage. Okay, get it? So it means you can focusing on indices, and some may not be country indices, could be like the SPDL, Spider. I give you already sample those SPDL sector index. Also can, like energy index, XLE. Maybe someone to buy what QQQ, or someone to buy Russia 2000 also can. Quite a lot of combination. Okay, why? Because there are a group of stocks. Although I must say that not all are giants. So their strength is because they use an entire group and mostly are giant. Okay, for example, 30 STI. Nowadays a giant are more and more. Probably out of 30 STI, at least 25 are giants. Okay, so even you don't know how to select stock, even STI is a slower growth. At least you buy STI, quite difficult for you to lose money if you hold for long term. Of course, you are good. In that case, you should buy better stock within the so-called STI, forming your own index, John index, Mary index, which is consists of 20 or 10 giants, as simple as that. Okay, and for you to monitor is very simple, right? With the tools you learn in day 1, 2, 3. Before that, to analyze one stock is very troublesome. You have to ask around, hey, Dr. T, help me to see. That's why last time you go through Dr. T, the free course, a few of you come to me, I say, sorry, I cannot give you personal financial advice. But during 6-day class, I promise to you, I'll teach you how to fish, which I'm doing here right now. You see? Because when you exactly know what you're doing, you feel confident. If Dr. T tell you what to do, this is your hard-earned money. I also don't know what your exact personalities. What if you're super kiasu, what you're super kiasi, the extreme one, then certain, who knows, you need to customize for yourself. Okay, the crisis investing already explained to you. Here's a buy fear, sell greed. Crisis not necessarily say business in crisis. Actually, business crisis lousy one. We don't want what the high flux case, the Singapore airline. Okay, it's not real true crisis. We want like a COVID-19 crisis come, people frightening, but actually the business not affected much. That's a real crisis. Means affecting the price crisis, but business not in crisis. Okay, but if business in crisis and price in crisis at the same time, that is a poor, low quality crisis stock. Okay, just remember that. So that's why sometimes you see when war coming, like last time Gulf War or whichever, then the stock market fall down. Okay, but not necessarily all the business are falling, but the fear, people worry, right? So that's why sometimes when you see crisis, you have to know whether it's a true crisis or fake crisis. Yeah, so that create opportunity. Some could be a true crisis. So that's why whenever you see a level 1 crisis, a business in trouble, Don't eagerly go and buy low. Buy low can become lower. Dr. T, what if I buy 1 cent per share? And 1 cent per share can go to zero. You can lose everything. Some people thought buy 1 cent, later on become 2 cents, it become 100%. No, that one is a value trap. Okay, swing trading or cyclic trading, similar as a market cycle investing, except the time frame is different. Just some market cycles for long term. Buy low, sell high. Buy below P25, sell above P75. Okay, for the cyclic or swing trading means you look at short term or mid term. Okay, make sure it's a positive CL. The strategy is exactly the same except the probably the fundamental not as important. Right, optimism is crucial. Right, technical is very important. Okay, so it's just a time scale different from between 7 and 1. And same thing for number 8. Number 8 versus number 2. Growth versus momentum. This is Jack. Where is Jack? Jack asking, hey, Dr. T, can you explain a bit about momentum trading? Momentum actually is follow the R2, okay, the technical side. Although I must say fundamental still important, but focusing on fundamental 3 years, ... Okay, yeah, because growth is more for the 8FA for 10 years, but momentum we are talking about an impulse. Okay, suddenly a bit speculative lah. Okay, you don't speculative doesn't matter, but you hope other people must be excited. So you look for those excited stock. Those like cold stock, those stock cannot move on, don't buy for momentum. Okay, so a lot of time you see certain stock like those glove stock, the top glove or those medical one in the last few months has been speculated. Those could be momentum, those technology stocks, those are software stock. So look for CAGR, R2 more than 70%. And then when you buy less than 50% optimism, not less than 25. Okay, but make sure the tail must go up. But make sure the TA, the technical analysis MA, all right, must go up. So don't be afraid of a historical high. Okay, sometimes historical high from optimism perspective is still low, because the share price high versus the optimism high is two different so-called this perspective. Okay, even the share price is historical high, optimism may not be historical high. Okay, due to the high CAGR. Okay, the best way to learn is through a case study. Allow me later on to go through a case study. Okay, so now look at the shorting. Shorting means everything reverse. Same thing for shorting, you can apply FA and TA. Look for the reverse 8FA. Dr. T, whichever I say, a stock must be minimum 4 out 8FA. Then you look for stock less than 4 FA, and the CAGR should be negative. But shorting usually is more for short term, mid term, so you no need to look for long term. Long term is a bonus, means the lousy stock is supported by long term coming down, but this is optional. Okay, but short term, mid term must be falling down, and ideally don't pay dividend. So that's why stock like SGX may not be ideal for shorting. Okay, but since shorting involving unlimited loss, because $1 can drop to $0 when you buy, but $1 shorting going up means losing money. $1 is a sky high, is a limit. So therefore, if a share price go, let's say more than X%, let's say 5% or 10%, you must put a cut loss. And how to do the trading for shorting? Go for the negative CR. Okay, don't short first. When optimism go to high, over 75%, don't short. When it cross P75 downward, then shorting at there. Then when you take profit, go down. When you reach P25, don't take profit first. You wait until when it cross up P25, when you cover your shorting. In fact, the reverse of shorting is exactly buying. Okay, but buying you got 4 exit strategies. I already covered on day 3 already. Okay, the last is actually the different asset combined together. Property combined stock become property stock. So that's why day 6 I must cover the property cycle. Okay, in order for you to buy property stock, you must know when the property cycle, how it behave. Right? At the same time, commodity cycle, even Forex also got a cycle, and their cycle are unique. So stock market could be every 5 to 10 years. Then the commodity could be every 20, 30 years. Property, Singapore, I think, has followed the stock market quite well. But this round, you see, COVID-19 affects stock market to low optimism. But COVID-19 did not force the property market. So this round, to this property market actually did not cause a major harm. Huh? Okay, so on day 6 we'll cover more to combine together. So that's why when you know the nature of the stock, know what kind of services they provided, then you know whether there's another hidden cycle of a cycle behind that which will affect your stock. Okay, so you must also understand, the nature of the business and so on, but that is beyond the 6-day class. 6-day class is already, to some people it's overwhelming. Dr. T, my hard disk is going to crash already. So, but I salute to you, until today you can still survive. Okay, so you don't mind. The best way to learn is through these case studies and homework. So now the most important moment. How many of you have done homework? So now I go to a pure day 3 homework, and if in fact my requirement to do homework is until day 3 only. All right. For day 4, if you want, optional. You can continue anything day 1, 2, 2, 3. You have whichever you have not finished one. Because your auto software and this auto web, whichever, all right, will expire on this after day 4, which is I think, let me see, sorry, after day 5, is it? Yeah, after day 5, let me double confirm. Did I say after day 5? Okay, doesn't matter. But Dr. D always give a solution. You don't have to worry, huh? Okay, so I'll give you a proposal tomorrow. You just wait for my proposal, right? Either you can continue using the auto software. I also have given you the free semi-auto already. Each one can make a decision. Later I'll show you how to make decision with semi-auto again. At the same time, some even you can use the auto software for free under the coaching program. Coaching is Dr. T, another very popular program, even lower cost than the 6-day class. But allow me not going to share over here because my focus is on a 6-day class. But on day 6, probably I'll give a short presentation. But some people cannot wait. So a compromise plan, I'll send you offline. So meaning tomorrow you'll receive my email, including the option of either using the auto software and also using so-called for free under coaching program. All this is to help you. Okay, so we put that aside. Now we come to the homework, which is the most important for day 4 here. Let's see how many of you have done homework. All right, today Dr. even wait until 5 p.m. As of 5 p.m., about 30 of you have done homework. So this is, in fact, the day 3 homework is the most difficult. Still got 30 of you. I think I'm very impressed because 30 is about 60% already. And in fact, I do a count. Even those did not submit homework for day 1, day 2, a few also submit. I think right now, if I'm not wrong, homework submission rate is close to over 90%. Please give yourself a big round of applause for that kind of effort. And as usual, right, if you put in effort, you'll get a reward. In fact, your biggest reward is you have trained yourself, right, to become self-confident. You compare with before day 1, Dr. T, I don't know whether I can cope. Dr. T, you send me over 10 email, I cannot take it, I cannot sleep. Don't worry, now you can sleep already. Okay? But after 6-day class, I also don't want you to be too relaxed. Try to, keep up the momentum. Because right now the stock market, although you miss the first round, the best time to enter is around April time. Because March, the COVID-19 crash, you miss that. No one can help it. Because even Dr. T willing to teach you, but the government say cannot meet each other, you see. But now you looks like you have a chance for a second round. Because there's a second wave of the COVID-19 in USA. So right now Trump in trouble. So that's why in the last 2 months, stock market having, I wouldn't say major, but at least some reasonable correction. So now there's a second wave you may consider. Okay, yeah. So even dividend stock, although may not be 7 to 8% return as 2 months ago, but right now still got 5 to 6%. Better than in the last 10 years already. Yeah. So that's why I'm not asking you to all go in, but plan accordingly. So after the 6-day class, try to use the current mid-scale crisis. This is only a mid-scale crisis. This is not yet a level 4 crisis, but I would say level 3.5. Okay, let's look at the homework. Then we discuss. There are many good homework. So probably we start with, okay, I see just now Jack over there. So maybe look at Jack homework. There are 2 funds. One is a Bill Gates Melinda Fund. You know, they are doing charity lah. Bill Gates very smart. You know, after selling Microsoft, then created one fund, right, doing charity. But you keep on doing charity, one day your fund will become zero. Right? So you know what he did? Similarly, like a retirement fund, he used fund to generate cash by investing in stocks. So his fund actually is based in stocks, and then use the stock income to. You see, this is unlimited money. Even one day, right? This Bill Gates say goodbye to the whole world. His fund can continue, who knows, for another 100 years. Even every year, give away money, right? But for you, you create your own charity fund to yourself, right? You mean charity to yourself lah. Means the money, right? Work for you lah. Do you get it? So let's look at Bill Gates fund. See how strong it is. See what's the number one top stocks. Are they all junk stock? Then if junk stock, must write a letter to this Bill Gates lah, huh? So we take a look. Okay. Anyway, the second one, later I'll look at it, is another fund, huh? Okay. Let me zoom in for you. All right. Jack already do the sorting. So how to do the sorting? Very simple. After you run it, go to the sort, right? Under here, data, sorting. If no response, like no, oh, by the way, for example, this case, no response, there are two possibilities. Either Jack has accidentally removed the equation, or you can use Control A first. Control A to select all, try one more time. If not, you have to use back my original 4 supergiant. I think Yusuf, I think you have one stock, one screener, also, I think it's you, also equation somehow is gone, if I'm not wrong, huh? Yeah, double check, doesn't matter. Because sometimes you play, maybe halfway you erase it, huh? Always go back to 4 supergiant if your sorting is disappear. You see, I Control A, come back already. Okay, but yours one, there's one Control A also cannot come back, huh? I'll come here, then we say okay. But anyway, it has been sorted already. So what's Bill Gates number one stock after sorting? You see, most of them green. CAGR green, auto green. Although here also got a few possible, may not be junk stock because it's a short term. So technically, Bill Gates has quite a good fund here. I think his charity fund can last for a long term. His best one is called Ecolab. Okay. Later I'll got chance on day 5, day 6, I'll give you some sample coaching homework. Which a stock stronger than Ecolab, competitor Ecolab. Huh? Okay. And then he invests in Warren Buffett, Berkshire. He promised to Warren Buffett, don't worry, I'll donate my fund. You know, Warren Buffett. I think it's reverse. Warren Buffett donate to him. Okay. So Warren Buffett promised that, you know, one day, you know, he said goodbye to the world. His money will be invested, so-called donated through the Berkshire. Huh? It's very smart. No need to give money. Give the stock. Stock is unlimited, huh? But Berkshire don't give dividend, huh? So he has to sell partial of it. Apple, Amazon, wow, Alphabet, Google. Hey, probably all this last time was competitor of Microsoft. By competitor. Sell Microsoft. I think he got probably very little Microsoft stock already, huh? Okay, Canadian Railway and so on. The rest I'm not too sure details, but all those are quite familiar stock. Hey, Dr. T also can buy this kind of stock there. Why only Bill Gates can make money? I cannot make money because Bill Gates can take action. You cannot take action. You're scared, right? So even got quite a few, including Alibaba also inside, huh? Okay. Twitter and the rest, although is negative here, but because it's still not proven long term yet. So even got negative here, we may not draw strong conclusion. So in general, this is a very good portfolio. Okay. Yeah. So let's see the second fund. Okay. Oh, by the way, just now even the fund, short term may not do well. Just now we're looking at long term. Right? If you're a long-term investor, you look at long-term. But today, if you're a short-term trader, let's see how Bill Gates will feel in the short term. Okay, you see, even Bill Gates cannot escape. We do a sorting. You see, so many stock, only 6 of them is green color, the slope. Okay, in fact, majority is negative. So that's why no matter how strong, even it's a fund, this is called systematic risk, right? So the unsystematic risk you can diversify, but systematic risk you can only use optimism to minimize it. Yeah, so that's why the LOFTP there is the motivation. Okay, the second fund called Stefan Mandel. This is, I think, a hedge fund manager. Okay, we'll take a look. See how good is a hedge fund manager. You have to spend a lot of money, commission to pay for it. This under long-term data sorting. All right, take a look. So I use Control A first. Okay, Control A, data sort. All right, now can already. Mastercard, good. You see, 28% CAGR. Okay, Transdism, Netflix. Okay, yeah, you see Canadian Pacific Railway. Uh, United Health Group, this is the 30 Dow Jones, one of them. Autodesk, most of them are good. Okay, got negative or not? Uh, a few, but those are the short-term one. So in fact, this is also quite good. Okay, yeah. So why they can buy a fund? I mean, they can form their own fund. Why you cannot? Does it mean must be billionaire to create a fund? You don't have to. Amazon, you can buy one unit also can. You don't need to buy 1,000, right? Although one unit is more than 1,000 lah. Okay, so this is the beauty of US stock. No need to buy one lot, just buy one, huh? Yeah. So this is as easy as that, huh? Okay. Let's give a round of applause to Jack for the effort, huh? Thank you so much. And as promised, if one do homework, I'll gather each of you will go homework unless it's a spring cleaning. Spring cleaning I will not share lah, huh? Because the one is a bit personal. We'll discuss only here, okay? But for those more general one, I will share, including Yusuf one. Yusuf, right? You have shared quite a few. Probably let me take a look. Banking, finance one, Singapore. Take a look. You have done two. One is you have done three actually. Busa Healthcare. Take a look at the Yusuf one. Actually, although we only got three major banks, but there are some also related, like Great Eastern, SGX, also under banking finance. These are the three so-called this pawn shop, right? So MoneyMax, MaxiCash, and ValueMax. Actually, the 8FA not bad, but the TA really not as good, huh? So from here, let's say this is a long term over here. Yeah, in fact, UOI, the insurance under this UOB, is the strongest for the R2, right? Followed by Great Eastern and SGX. But it doesn't mean the three major banks cannot buy 4-5% because you need to add the dividend yield over here. After adding, in fact, except this few, the pawn shop, this one probably, cannot consider for the investing purpose. But they could be good dividend stock, you see. Even one got 10%. But to enjoy 10% dividend, this one is a minus 11%. You plus minus at the end, you still break even. So that's why we don't look for negative CR1, huh? Okay, but how about for short term? You see, red color one. So I understand what I'm trying to say, huh? Trading, investing, there's a big difference. So your LOFTP, you must know your personality first, which is important. Once you know the PA, your flow analysis will be clear already, which is your main focus. Okay, and then we got the Busa Healthcare stock. You're also interested in the Busa stock. Let's take a look. So let's say for the long term only lah. So A Health. Okay, I may not know all right? Hatalega, the glove one, Kosan. KPJ is the hospital one, or this one, or Supermax, the Top Glove. All these are the so-called glove related lah. You want to put it under medical, also correct lah, huh? It's nothing wrong, huh? Yeah, in fact, I'll say most of them are giant stocks. Okay, in fact, high R2 as well. In fact, from here, we cannot conclude they are giant yet. This is only three criteria are giant. More than 207, the CAGR 5 to 30%, but the last one you still need to, Yusuf still need to double click on PDF. But you see, this help him to do a quick screening. Whichever stock he like, then only he spend time double click on the PDF to double check on 8FA. And the best thing, whoever got the auto web, the web version one, nowadays even we add a new feature. Auto web right now can compute 8FA for you automatically. So can see, wow, Dr. T very good. In that case, no need to go and check one by one. You know why I don't want to introduce that first to you? Once I give that to you, then you lose the ability already. Then you become pure dependent on others. So that's why I want to train you from very fundamental. Right, so we go through the 8FA, right, in a painful way from day one until now. You see, all go into your brain already. Now I want to erase from you also difficult already, because in your mind already. Next time, whether you follow me, not follow me, every time you want to press a button, then you think, oh, Dr. T say, oh, if I buy negative EPS, then something will happen already. But my friend all say this stock can run. I don't know what to do. Then you think, at least you got 1 minute to think. Okay, so this is the reason why you got 6A class, because every day I instill all these important concept into you. Right, on day one, I know you're still not too sure, you're overwhelmed. You see now day four, you're more comfortable already. Huh? Okay, so probably for 40 booster, quite a few of you have done that. Let me show you this one. Including you also have done that. So this is additional homework. Right, share investment magazine. There's one, this magazine. Right now they don't operate anymore. 股票资讯, they got Chinese and English version. So there's 1 year they write one article on 40 recommended Malaysia stock. So whenever you see those recommendation, next time you thank you to your reminder, whoever your reminder, thank you for your tips. You go and free seminar, you write, thank you very much, but don't follow them. You go back, put them in the auto screener, okay? And from here, you can check which are the good one, Yeah, so from here, you can see Dutch Lady, followed by Kosan, Nestle, Heineken, Malaysia, All these are a good one, Yeah, so Dutch Lady, right, F&B related, right? Nestle, same thing. Heineken, Malaysia. In Malaysia, there are only 2 licenses given to the so-called, alcohol, this alcohol producer, like the wine, the beer producer. One is Heineken, the other one is Carlsberg. Okay, Heineken actually take over this Guinness Anchor. Okay, yeah. So during the Prime Minister Abdullah time, they only give the 2 license only. So that's why these 2 both are good dividend stock. Okay, but they are not right now because share price a bit on the high side, so dividend yield not so high. But it's a very strong growth. Yeah, take a look. Carlsberg is here. So both of them are inside. Okay, the rest. Let me see anything I want to show to you. Same thing for the 30 STI. They have 30 KLCI index. Then we got another probably 40 or 50 Hang Seng, right? So that's why this is the best way to start, this investment from here. Okay, anyway, whoever interested in Malaysia, you see Hatta Lega also inside, but Hatta Lega year 208. That's why just miss here, but technically you want to call it a long-term giant also can. Same thing as a Visa 208, no? IHH, Singapore also has one, right? So related to your this Parkway, Okay, and so on. Okay, so I'll send you this sample. Homework back to you as well, Okay, all right. That's thank you to Yusuf, everyone. Okay, we got Winston Lim. Where are you, Winston? Winston Lim. Okay, thank you, Winston. He's the one did a lot of day one homework and continue for the day two. Oh, sorry, I forgot it. The one got issue one is Winston, the first one. Winston, not Yusuf. I remember now. I think Winston, your first one, I cannot use a control A. That doesn't matter, but the rest is okay. Somehow, probably your equation is changed. I think it's you, not Yusuf. Okay, but you did very well. Actually, it's not 4 stock only. Like somehow my file name 4 super giant, you keep the 4. I'm asking you this is a number. You got 30, then you put 30 lah. Then some people thought must put 4. No lah. Okay. So if anyone still want to submit homework, make sure this is a numbering of a stock, so I have to change for you. So what Winston did is he take the day one, the hundreds of the New York stock, Singapore stock, under value growth or whichever, then he put them run, batch by batch. Then you got part 1, part 2, part 3. Definitely not 4 stock. For example, now we look at New York. New York, how many stock? Okay, so let's take a look at New York. So from day one, using Share Investor Screener. Later on, you have chance to sign up for the Share Investor. You can combine to this auto screener. Means from day one homework, the list, I forgot to mention, from the Share Investor, right? Remember I say the column A got a ticker, right? You control C, you can paste to the auto screener. But when you paste, don't use control V. You must paste special as 1, 2, 3. Otherwise, the equation will paste inside, then wrong already. Okay, so before you paste to the integer batch, there's a list plus what, plus 1, whichever, right? For example, here, just to show you. You see integer batch here. You don't need to key in one by one. This one, remember, this is a list from day 1. All right, day 1 already give you 27 exchanges. You Control C from column 1. But after you Control C, you right click here, paste special. For example, let me show you how to paste it. You Control, let's say, you copy, and then come to here, you right click, paste as 1, 2, 3. Is it okay? You see the second one, paste as 1, 2, 3. Paste as a value lah. That will be okay. Don't use Control V for Victor. Don't use that. Okay. Anyway, come back to here. How many of those? Oh, each one got 50. So he done 3 parts. So probably over 100 already. So in fact, Winston, what I can do is this one. If you want, the 3 part, you can copy and paste to the bottom. Then you can do sorting for 150, 100 plus stock together. Because right now you got 3 parts. Actually, there is a reason. Because of formatting, I think it's gone now. Okay, I understand what I mean. Because of formatting is probably applying. I think it also depends on how you copy. You Control C, Control V, right? Okay. Okay, also depends on. Okay, there's possibility. It's possible because I know what I mean. Because at the bottom here, probably you see, the equation is no longer here. Let me try. I drag this one, I know. Actually, equation is still here. I do a quick one, see whether it's there. By right, it should work. It means you copy, from one and then paste to another one. At least for sorting purpose, it's all right. Okay, but you cannot run anymore if you have more than 50 stock. But to combine for sorting, now I highlight, I Control C. Okay, because I don't know whether any change in your formula, I just try. Okay, let's say I Control V for Victor. Actually, it's still there, except the here is not. Oh, I know what I mean. Okay, I know what I mean. Actually, for you to change also not difficult, but somehow, for this particular case, in that case, I don't want to confuse further, In that case, you got 3 different tab, which is all right, 3 different. So let's look at your first one. Yes. By right is okay one. Actually, we tried before. At least the last class okay. But there might be certain. Anyway, the one is not the so-called investment. The one you can do the formatting. If one formatting is very simple, you just come to here. Whoever more IT savvy one, you right click. You go to data. I think I think it's data or review. I cannot remember. There's one conditional formatting. Let me think for a while. Home, conditional formatting, you see? Home, conditional formatting. Manage rules. It's here. Okay, if one you can come to here, but I think it will be too confusing because I'm not too sure whether the formula may be changed or not, whichever. I think it's not important. Then in that case, you sort by 50 by itself. Yeah. Whoever you are using the web version, your web version, one portfolio allow 100 in the list. Because Excel I limit to 50, I'm afraid the memory is overwhelming. Yeah, even whoever using web version, you can do day 1 to day 3 homework, except you don't use auto screener. You use a plus P, you add to your portfolio, then you'll get something similar to that. Okay, so we have ATL as the number 1 here, followed by Essential. Essential, I thought, Jack, are you the one who did the homework? ACC or another classmate? Not you, I think I remember. One of you cannot remember who did that, Okay, anyway, I probably have sent that to you on day 3, Yeah, so this is one combination. This is the part 1. Part 2 one, got Blackstone as the highest one, then followed by Delta Airline, Then, and so on, You can read through yourself, It's not difficult. Anyway, I'll send that. Definitely it's not 4 stock. Okay, remember, file name don't put a 4 anymore. and then it's truly fall lah. That's why I received some of you, I'm wondering, hey, how come you don't want to look on more stock? How come when you go look at 4 stock? Then after I double click, oh, actually more than that, huh? Okay, anyway, how about Singapore growth stock? Just curious. Look at Singapore one. We look at part one. Because Singapore got 60 plus growth stock from day one, right? You key in that. Some of you, for example, the 40 Busa, how come out only 30? Because you use a SI plus SI online. Online only got 30. If you want to run more than 30, less than 50, you use SI local. Then you need to download the exchange in advance. Huh? All right. Okay, anyway, Cortina is the highest one, followed by Jardine Stocks, Power Life, Challenger, and so on, huh? According to sorting here. This is a day one homework from the share investor screener. Extend to day 3 over here. Is okay? All right. But Dr. T, I like to look for momentum stock. How? Maybe Jack interested. So for momentum stock, usually a good candidate is start with a growth stock. But you don't come to long term. You purposely come to short term. So you come to here. But with the COVID-19, I think quite a lot is the red color one. Yeah, so only a few maybe. In fact, we got 0 momentum stock here. You see the stronger momentum in maybe Sheng Siong. All right, Auto is 54. Huh? Later got chance, I'll see whether I can look at real time what's the latest momentum stock. I'm using the web version. Web version can give you the latest one. Huh? No need to run anymore. Huh? Yeah, because here you still need to do the day 1 to day 3 conversion. Yeah. So Sheng Siong during COVID-19 quite bullish, but right now also getting a bit weaker right now. Huh? Still got up here, triple up. Huh? So for momentum stock, need to make sure these two are up, at least short term, mid term. But also double check whether it's up for long term already or just up. Huh? Ideally, it's just cross. That will be good, right? It means a stock is above 20 and 50 days MA, but not too far away lah. Still, you got potential. Otherwise, cut long time ago, the knife cut the tofu like 3 months ago. Now you go in, probably could be under correction already, possible, even it's up. Huh? Okay, other than this, let's take a look. All right, before later, I'll give you a break. We got the Poly, are you here, Paul? Cyber security. Huh? Okay, Paul, huh? Okay, so he has done the 30 Busa dividend stock. Just curious, look at here first. He also interested in Pardini. Pardini, if not wrong, is related to fashion, right? Okay, but the business, you see the last 2 years, a bit coming down. So double check on that. Although optimism is low right now, 11. Because the short term down, do you see that? Yeah, because it's a stock shortlisted by this Paul here, huh? Okay, so I'll say quite many are giant stock, but this is not everything. Double check on the short term, double check on the 8FA, right? For example, he is interested, this dividend stock, in Malaysia, dividend stock is not as high as Singapore one, okay? At the same time, this probably will look at the Pardini case. Your PDF, Pardini. Okay, don't mind, because just some a few of you have missed so-called the earlier detail this explanation. Probably I go through one round, super fast one, huh? Just now I did one round for KC. So here, you don't mind, I go through a bit fast, but it's a complete procedure. All right, number 1, check on personality. Paul, are you an investor or short-term trader? Huh? Investor. So we come to a long term here. So January 2000, right? This is more than 20, so-called 207 pass. The CAGR 23% is between 5 to 30% pass. And then straight away, I'm now using the PDF file. Go to the. Oh, by the way, if today I'm using a semi-auto one, for example, today use a free version, I'll ignore all here. I just look at here. So Paul, is it uptrend or downtrend? Up. That's a minimum. And the year 2000 pass. And what's the optimism? Agak-agak 0 to 25, so this may be like 10+%. Yeah, rate here, a bit cheating lah, 11%, huh? Okay, so that's why even semi-auto you can make money one. So how? You don't buy here, you wait until here you buy. Okay, in fact this stock follow quite good. Okay, so but Dr. T, a bit sayang, why wait to here? Why not I buy here? So you have to so-called talk to yourself lah. Okay, all right. So the This 8FA, we take a look, a quick one. So you see this is the one I say a bit worried lah. Dot a bit come down. So that's why the optimism is down as well. But definitely it's still a giant. This is at least half a point, right? Although not as consistent. ROE between 5 to 30%. At the same time, average ROE for the last 10 years, 25%, more than 5. So 1.5 point here, right? Consistent positive uptrend, 1 point. This is, if you think Dr. T is down and up again, if you have a concern, usually when TTM go up, I may go and check lah, usually quite unlikely for 1 point to go up, but if you're a bit worried, I'd rather not to give any point at all. But this point, even this point is still less than 50%. I would say at least give half a point lah. So 1.5, total 3 points. Okay, this is definitely positive uptrend, 2 point each, 5 point already. And this is definitely uptrend, 6 point. Okay, is it 6 already? Okay, and then the last one, the dividend also half a point. This is 4.7 dividend yield and a half a point. So conclusion, 7 out of 8 FA is okay. Only minus EPS and minus a debt over here. Yeah, is quite strong. So in fact, dividend yield also quite attractive. I must say that, huh? Yeah, no wonder Paul actually pay attention to this stock, huh? Okay, and in fact, the past dividend yield you see in the last 10 years, average around between 3 to 5% average. Right now, it's close around 5%. Okay, other than this, midterm, also a good signal. Midterm, but the CAGR not strong enough at 2%. You want to increase the dividend yield. Usually short term cannot add dividend yield because short term not necessary. You can wait until dividend come in. But midterm possible. 2% you add that 3-4% may be okay. Huh? This one I take photo, I will send to you lah. Huh? Okay. But for trading purpose, your main objective is buy low, sell high. But this is only this factor alone. Huh? But the CAGR not so strong. So this is a negative part of it. And for short term, still downtrend. So short term trading may not be good. So even some people may want to do shorting. Negative CR, high optimism, trend down. So that's why, but they may not want to short at the dividend stock. Huh? Okay, so we continue. Yeah, maybe TA, down, up, down. Okay, but this down is congested over here. Who knows, today become up again. Yeah, so that's why it's quite close to that some people who may want to consider long-term part. Huh? Yeah, long-term, for example, at here. All right, you say want to go in early first, I will not stop you. You want to say wait until P25 to go in, also okay. Yeah, because this PF is 158%. So 158, Paul, is it cyclic or is it the defensive? 158 PF. Because Dr. T mentioned when it's over 100%, it's a cyclic for PF. This is 158%. So is it cyclic or defensive? Okay, the PF means from the green line to the red line, it fluctuates. Dr. T say if the fluctuation less than 100% is defensive, more than 100% is cyclic, and this is 158%. So is it cyclic or defensive, Paul? Cyclic, okay? So it means cyclic, you need to buy low, sell high, less than 25%. All right. So it means possible action could be, let's see what's your action, just curious. Paul action is buy. Oh, they don't say this is Dr. T action. No, this is Paul action. Okay, yeah, so you want to share the pain and joy with Paul, then you follow his action. Then he become your manager already, huh? Okay, and only pay him commission, okay? But he will not be responsible for your profit or loss, okay? As simple as that. Okay, other than this, Paul also shared the cybersecurity stocks. There are 25 of them. Take a look. What are those? Oh, very interesting homework. In fact, cybersecurity quite good the business because it's this technology software related. Okay, I already sorted already. All right. NetScout. Okay, I'm not so familiar with this one, but I've done homework on this one before. Checkpoint. Checkpoint is very strong. Huh? Both are very good. Okay. Auto, although not super high, but still more on growth side. CAGR 8 to 10%. Usually they don't pay much dividend yield. You see, NA doesn't mean anything wrong with database. NA means they don't pay dividend. Okay. Yeah. At the same time, got Intel and so on. I see Intel 5% not bad. Okay. Some a bit younger like OTA and so on. So that's why some technology stock, some could be momentum. You don't mind I come to here on momentum. Alright, see whether they got momentum or not. Quite a lot of red color one. Okay, data sort. Okay, 3 could be potential one. Just color, Okta, and CrowdStrike. Okay, let's see any other familiar name or not. Okay, all this because there are too many this kind of tech stocks. Some probably emerged in the last few years. If you're interested, you need to do your background study lah. Even our own coaching program, we every month will study a few stocks. Even I cannot know all the 100,000 stock in the whole world lah. Okay, so this treat even this one as a quick, this so-called screening for you for those potential one. Your minimum must go and do some Google to understand what kind of business nature, and if possible even to read the 3 financial report in a more detail in addition to just the 8FA weapon. Okay, for example, any stock you're interested, maybe you like Okta, right? Then you go and click on PDF file when you spend a few minutes on that. It's okay? Okay, let's give a round of applause to Paul and also just some whoever we discussed so far.